Today's video is all about FACT0RN, enhancing utility through factorizing instead of hashing. Today we're going to be doing a deep dive into this project, looking into the team, the tokenomics, the utility, and the overall value proposition, and much more. We're trying to figure out if this project has what it takes to make it to our portfolio for the up-and-coming bull run. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome on the channel. We talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. And the question is FACT0RN an opportunity? Guys, we're going to be doing a deep dive into this project, looking into it and using the website as the major outlet for information, basically using the website as the main platform. I'm curious as to whether we can get what we need out of this website, out of the information available to us, in order to get bullish here for the bull run. You know, is this a project that we should be scaling in? All right, let's begin. Let's see what's going on here with this project. It looks pretty interesting. You know, the landing page is fairly simple here, guys. That's all it is. This is the website, pretty much. You land on the page on the main website, factorn.io/home, and this is what you get. Now, what's up front and center is the Coinbase, right? So it is a Coinbase crypto community fund recipient. So it did receive some funds from Coinbase in order to get this thing going, which is obviously a very bullish thing to have one of the major exchanges out there basically backing you. So we'll take a look at this. They have a full report. Basically, Coinbase made a full report on FACT0RN, basically a bit of a outline of what it is and so on. We'll look at that. And then, of course, we'll navigate this website. It's a very simple one, but we'll navigate it to kind of see what kind of information we could gather from it. So you can see there's a link for the white papers. There's a link about us and so on. So I have these kind of already open. We'll do the white paper at the end because the white paper is a bit complex. To be honest, this project took a bit of a different route in the sense that the white paper just gets right into the depth of what the tech is about, which is very typical of a tech white paper. However, guys, when you're also talking about a project, you want a little bit of other factors like, you know, tokenomics, a little bit of the value proposition and so on and so forth. So I feel like it's a good thing, you know, having those technical white papers, but if the website doesn't give you everything else, there's a bit of an issue. So sometimes I like when the white papers have different levels, like you can get into depth and you can keep it very vague, and you can have some of the you know, some of the information that we need, like the roadmap and so on. There's a bit of a roadmap here. There's some information. Okay, so let's just begin. Let's get right into it. If we click here, we got white paper. I got already this open, so just as good. So we'll have that on the side. And then we have the About Us. In the About Us section, in fact, you got a bit more information about the project itself. Obviously, we expected it to have a bit of information regarding the team because you about us mean who's behind it, and there's not much information. You know, the team is not doxed. Now, there is a tad bit of information out there with regards to the founder, I believe, but again, nothing really solid that I can go by. You know, if the team or the founder or the heads behind this project really want to, you know, let the public know, they should make it up front and center right here on the webpage. You know, exactly how Coinbase is listed. They should also have themselves there, you know. And I do appreciate a lot of the teams that have LinkedIn accounts so that we can get into a bit of detail with regards to their history. Their professional history is quite important, you know, and to know their network, their overall network is going to add some value to the project itself. Now, there is some things to be said here. Now, this is completely fair launch. We'll talk about that in a second, but a lot of teams feel that when there's a fair launch, the team doesn't need to be doxed, which I totally disagree. It needs to be doxed just to know where this is coming from. All right, let's just continue going on here. The research center tab here is pretty good. You got your benchmarks, which I found the roadmap at least, and I found exchange directories, which is quite easy to find even on CoinGecko or CoinMarketCap. And by the way, guys, those two websites, you know, their numbers are off, completely off. We'll look into that a bit more. The Explorer is solid. The best part of all of this, especially when doing a deep dive with a very small market cap, is the fact that a lot of them don't even have explorers. To see that they do makes me quite bullish. I like that, because then you can get a lot of transparency of what's happening on the chain, right? So let's continue. About us, roadmap, exchange, block, block explorer, and the white papers, and we got going on here. Okay, so let's go to the about us section. The about us section basically summarize a little bit about what Factor is. Okay, so Factor uses integer factorization as its proof of work instead of hashing. Guys, that's a critical statement right there, because when we talk about proof of work, traditionally we talk about hashing and the ability to do mathematics. And this is a very important thing, because we can use Bitcoin as an example here, because technically Factor is a fork of Bitcoin. So what they're really trying to do here, let me just kind of give you a quick summary, is Factor's trying to improve Bitcoin. It's an improvement on Bitcoin. That's plain and simple. So as an improvement, it's definitely a competitor. It's trying to compete with Bitcoin, and it's trying to figure out what aspects of Bitcoin, are maybe due for an improvement. And the fact is that Bitcoin uses random mathematics that is not really useful. So there's a bit of a trend here. Useful proof of work. There's a trend on multiple projects. I've covered them in the past here on the channel. And I'm noticing that a lot of the proof of work, a lot of the newer proof of work chains are basically trying to come out with a useful proof of work. Now, Factor has a usefulness. Its usefulness is that while it's doing its mathematics, it's not some random mathematics that has no usefulness like what Bitcoin does. Bitcoin's hash is pretty useless. However, its utility doing that math is to just secure the network. I get it. However, FACT0RN claims that it can secure its network, get the blockchain going. Let's put it that way, by using some sort of mathematics that is useful, and what it refers to as factorization, factoring. So by doing factorization mathematics, it can actually put the work aspect of the proof of work to some good use, rather than doing some random math that has no value. So this is what we have to keep in mind. We're shifting from proof of work to useful proof of work, a work that is useful. Now, I covered a previous project in the past that has a similar thing, the useful proof of work. However, what we do have to understand is that Factor0RN is not a smart contract platform. So essentially, it's basically competing with other useful proof of work platforms that are smart contract. That's a difficult thing to, compete with, because you can have smart contract platforms that, do everything. Meanwhile, Factor0RN is specializing in what Bitcoin already does, but just improving it by making it useful proof of work. Okay, so let's move on from there. Obviously, that is a bit of an idea that we got to let simmer, because it's obviously a new concept that is trending right now. So the RSA cryptographic system has been widely used to secure data online by relying on the difficulty of factoring integers. Okay, so this is where it comes into play. Banks today use it to secure their data. No other blockchain has been able to use factoring in the blockchain space. So you can see that factoring has been already used in the past to secure networks. Okay, so that's important. The emissions. Okay, so a little bit of tokenomics. You can see that this should have been, all this information should have been blown out on the website with some good graphics, some good charts, some good data sets or something to give us a little bit more detail. But the emissions, no pre-mining, no pre-sale, no team allocation, no emission schedule, mining only. So it's basically being emitted based on rewards on the miner side. So that's good. Unlimited supply, but low reward for block discovery. So the unlimited supply is something that we need to discuss here, because this is a level of ambiguity that could get some newcomers that are doing some research into this project, get them a little bit, reluctant. And the fact is that a lot of people use this unlimited supply as a red flag. But the reality is, Ethereum has a limited supply. Now, Ethereum clearly has a burning mechanism that makes it anti-inflationary. Basically, it's deflationary at the current moment, because the burning rate is much higher than the emissions. However, here, guys, we have to understand that the clarity behind how Factor0RN is going to keep dilution at bay is quite important. Dilution meaning more tokens entering supply over and over and over without some mechanism to keep it at bay, so that the value doesn't get the value of the token or the coin doesn't get diluted, basically go down in value. And this is where I felt like I needed more information, a lot more information. I read the white papers. Yes, it's very vague there, and I'll make sure that I highlight that for you guys on in a second on the white paper. But that is something that even if you went on the Discord, which I did, you know, people weren't really helpful. You know, that's one of the things that I've noticed on the Discord. There's the community there. I'm not going to say it's the top individuals of the team, because that's something that the team should consider, is getting someone fully on board in communications that are going to represent FACT0RN properly. But the current people that are on the Discord are not very engaging and not very useful or helpful, and you know, and very derogatory. So at the end of the day, like, what are we here for? We're here to get mass adoption, and if you want mass adoption, you got to make people comfortable with the tech, and you got to be able to explain it to them and have a full-on white paper, have a couple of videos on here, have some sort of interactive media, whatever it is, a Git book or something that can you know, basically explain how they are going to keep the oversupply, the max supply at bay, so that there's no dilution. So that was a little bit of an issue for me. 1.5 years and less. Okay, 260k coin in supply. Sure, circulating supply is always equal to total supply at all times, and max supply essentially is unlimited. So you get my point. Like, this is where we're at. That is the biggest area that we need a little bit more information. So the mathematics, integer factorization is a mathematical process that involves breaking down a given integer into its prime factors. Guys, no math wizards necessary here. We're just going to get a bit of an idea of what the math is all about, because that's what the usefulness of this proof of work chain is, which are the fundamentals, building blocks of the whole numbers. This process plays a crucial role in number theory, and it has significant importance in areas like cryptography, number theory, abstract algebra, elliptic curves, Galileo's theory, and lattice-based cryptography. So there is some utility here and value and purpose for engaging in such calculations, and that's where the usefulness really has its value. Okay, so let's move on. That's it for this. We got a nice footer on this page that has GitHub, white paper, Explorer, Coinbase, Twitter, Discord, and all their socials and all of that. I'm just confused as to why this is pin or p this and then FACT0RN, and they don't really relate. The logo and the whole the marketing don't really relate, or maybe it's just going right over my head. So that's a bit of a concern for me. All right, so that's that. This is a good page here, but it does need to be blown out with a little bit more. Okay, so let's move on. Let's take a look at the roadmap. The roadmap here is basic, but at least they have one, and at least they are showing the fact is that they hit their major milestones. Getting listed on CoinMarketCap and CoinGecko are great, you know, obviously great goals to set, but they are poorly represented on both platforms. Unfortunately, their numbers are off, their market cap, everything, all the details with regards to their tokenomics and their metrics are totally off. And I know it's not, you know, FACT0RN's fault necessarily. It is CoinMarketCap's and CoinGecko's fault for not keeping it up to date, or whatever the case is. But at the end of the day, that's one of the issues, guys. If you're looking for metrics, you got to get onto their block explorer, and we'll show you that in a second. What else do we have here? Miner integration, development mining pool, wallet integration, and so on and so forth. So they got some things in progress still. You can see that they're still working on things. This is a very small market cap project, okay, guys? There's not much out there as of now, as far as circulating supply and all of that stuff. So we do expect a little bit more growth here as it gets listed on major exchanges or on other exchanges. I'm actually curious as to why this is not even listed on Coinbase at the current moment, if it's that bullish, if they won the award or won the funding. But it could be in the works in the future. So this is why what we really have to do is think speculative and future. Okay, so let's move on. That's all you got here. I would have loved some dates. I would have loved some, you know, some targets, because really that keeps the team a bit accountable. But I understand that there's risk by putting dates, because if you don't miss your deadline, then all of a sudden, you know, volatility hits the market, right? So I get it. Let's look at the exchanges. Obviously, exchange and directories, CoinGecko, CoinMarketCap, all of these coin paprika, all of this, and then the list Dex Trade is the exchange, and Egg X or whatever this is called is another exchange. Very low liquidity exchanges, almost not really popular, almost unheard of exchanges. And to be honest, we need a little bit more here, and it's a bit of an issue because without liquidity, guys, how are you going to enter and exit the market and be able to trade and buy and sell? So if it does very well, where are you going to be able to sell it on the open market? And you're going to have to rely on these low volume, low liquidity exchanges, unfortunately. Okay, so that's that. We're flying through it because, guys, there's not much even here, but in one way it's actually good because it's straight up, right? There's no combing through anything. In fact, I feel like I needed to comb through the details behind the tokenomics a little bit more, and some of the details behind the tech, but all good so far. So we did the roadmap. Let's take a look at the Explorer. The Explorer is actually the best part of this entire project. In my opinion, the Explorer is giving us a lot of information that we couldn't gather from other websites. For example, the coin supply, the circulating supply is at 372,000 units are out there of FACT tokens. The price right now, it came down since I did do the research and so on, but it's hovering around that $70,000 mark, $70 mark, which is, you know, fine. That's pretty arbitrary because what we really want to know is the market cap. The market cap is at 25,000, more or less 25.7 thousand, which means that it is a micro cap. It's a very, very small cap project, and we can see a bit of the hash rate fall. You know, the little bit of the network hash, and which means that you know, maybe there's a bit of a dip in the price, and there has been in the last 24 hours a bit of a dip in the price. Network difficulty is flatline, so there's not much congestion on the network, which is good. And then you got your transactions that are happening second by second, which is cool. But if we kind of look here on the left, you got a few tabs where you can kind of play around with some of this data. That's the first one, the movement. You got a little bit of the latest movement, timestamps, how many coins and so on, the network. You got here peers, network peers, what's going on here by country. But this is probably the most important for me personally. I start looking at the wallets. Like, you know, you can see that all these wallets are pretty much small wallets. There's no major holders out there, and that's part of that fair launch concept, is that the only way you're going to earn is by actually getting involved in the network, right? And if you get involved in the network, you get rewarded and so on and so forth. And you can see that the wallet distribution is really, really well distributed. Now, top 25 wallets hold just approximately 50% of the tokens, but that's distributed between 25 wallets, so it's not so concentrated. We got to understand that, and some people got in early and started mining early and started buying early, and of course they're going to get rewarded, and they're going to you know, have a lot more stakes in the network and a bigger portion of the pie. But as you know, they potentially take profits, because they will, and eventually they take profit because ultimately they have a big bag and they want to be able to enjoy some of those profits. And then this side of the pie eventually gets split up a little bit as people start taking profits. Those early stakeholders take profit, so something to consider. It's not bad. The wallet distribution is okay, pretty safe. Okay, so let's move on. What else do we got here? Any markets? What's going on the different exchanges, the volume, the trade history? So as I said before, a lot of the new blockchains that come out, they get nowhere near as much detail as this Explorer has. So this Explorer is a 10 out of 10. You can get a lot of information about what's going on the chain. And if you want to get these metrics and start analyzing the on-chain metrics to give yourself a bit of an edge, guys, it definitely has a lot of information for you. So 10 out of 10 right here. And then let's move on. What else do we got? Let's get right into the white papers, guys. The white papers. So we'll scroll through the white papers, no doubt, but I want to jump right into this portion right here for a second, because this portion, you know, is the biggest. I think this is the conversation piece, in the sense that we see that there is a max supply that is basically unlimited, right? As many tokens can be printed as much as necessary, which is a very common feature for layer ones. Okay, very common, because as a utility token, you want to be able to distribute as much as the overall network needs, as much as the ecosystem needs. Right? You want to be able to basically issue tokens as much as it needs, but we need some sort of DAO. We need some sort of decentralized organization to govern that. However, here, guys, we're in a system that is completely fair launch, and the tokens are going to be out there, and the free market's going to be basically the invisible hand will judge. Now, in this case, what I want to make you understand is that the way they trying to reduce the inflation and the dilution of the actual price is pure invisible hand, pure supply and demand. So the reward function is basically the reward function is an exponential in shape, but modest in coin rewards. Essentially, as the rewards will get basically smaller as the numbers, as the factoring becomes more difficult. So potential shape is required because of the marginal cost of factoring. A bigger number is also exponential. So the exponential shape is required because as the marginal cost of factoring bigger numbers is also required, it basically means that as the factors become more difficult, there's going to be a lot more cost involved to factorize. Otherwise, the opportunity cost of factoring smaller numbers will always be negative, and it will become more profitable to find and factor smaller prime numbers because they're a lot easier and they're a lot more profitable. So in this case, there has to be some sort of relationship between the difficulty level of factoring and the rewards issued to the miners, in this case for that useful proof of work. So they're factoring numbers in order to do the useful proof of work. While the shape is exponential, the amount of coins rewarded must remain reasonably bounded. So this is where the quote unquote the quote comes in, reasonably bounded. What that reasonably means for me means that there's no certainties. Reasonable is a word that I really don't like, right? Because you need clarity. What do you mean by reasonable? Is there a mechanism to really get us fundamentally secure that we are going to have at least something that is deflationary over time? Otherwise, the inflation generated by the yearly influx of coins through the miners would adversely impact the coin's value. So exactly what I'm saying, at least they do realize that something needs to be there to keep the rewards intact, or basically keep them reasonably bounded. But I don't see a very clear mechanism. Now, maybe it is just that it doesn't trigger. I'm not getting it, but I read this white paper. I tried to get on the community and I wasn't able to figure it out. I went on the website. I did everything that a regular investor or a newcomer to this space would do in order to get informed. And if it didn't do it for me, I guarantee you that a lot of individuals that are new to this space will also not understand or get it. So this comes now into the responsibility of the team to actually have some information here that is spelled out clearly. Exactly how are they going to keep it reasonably bounded, right? Now, I understand. We know that, again, I made that comparison with Ethereum. Ethereum's it's reasonably bounded, is clear, cut, and dry. There is a burn rate. Regardless, there's no negotiation here. What is this reasonably bounded mechanism that they have here? So for me, this is a bit of an issue. Now, I'm not saying that it's a complete red flag, but if it wants to be something that people get confident in, they need to provide a lot more information other than this. Okay, so let's zoom out a little bit. Let's get into a bit more of this white paper, because there's a lot here, guys. You really have to know your math. You really got to be really on it with your numbers and so on and so forth. So because it really does get into a lot of the scenario of factoring and the numbers and the value proposition of the numbers and so on and so forth. And we're going to do a little bit cover a little bit what is covered here, the important stuff for the regular investor on the Coinbase on the Coinbase blog post. I think it's a blog post, but we'll look at that in a second. But you could see as we scroll, there's a lot happening here. We get quickly into the math. We get quickly into the the details of how this works with the hashing. Remember, the hashing, what I mean is how it does the usefulness, the actual factoring, the block size, and all these technical aspects, guys. I know this is a lot very interesting for some people, but for the regular individual, this is not not really what we're looking for, because it does take a lot of technical knowledge, right? You got to know exactly about what they're talking about here. So we're talking about the future of work, the proof of work, and that's about it. You can see that it's basically a lot of math. Okay, so typical white papers from a tech perspective, yes, this is great, but it should offer a little bit more. Some of the other things that was covered on the website and in the About Us page should be included in some sort of document, or even on the website in a very nice packaged way. Okay, so do your due diligence. If you're interested in, brushing up your math skills, getting involved in here, guys, do what you got to do. But really, this is beyond the scope. All right, so let's move on. Let's get right into here. This is the Coinbase post, or a blog post that I was talking about. FACT0RN blockchain integer factorization as proof of work, POW. So what I want to do is kind of summarize this to continue calling it the useful proof of work. I've seen this term before used, and I think it's picking up in trend. And Coinbase obviously potentially found that this was definitely a trend that it wants to jump on. So this is why they got on board with the team and basically gave them they won some sort of an award or something like that, which is really good. Proof of work. So let's get right into this. White papers analysis, New York Times. Okay, so they kind of take a little jab at Bitcoin. I don't really necessarily buy their approach here, how they took at it, basically comparing Bitcoin's electricity consumption with the state of Washington for a year. Guys, remember, Bitcoin is global. You cannot compare a state from a global perspective, right? And all the population of the world that is engaging on the Bitcoin network. So that's something you got to understand. A better comparison would be to ask yourself, what is Bitcoin trying to replace? What is the competition, or what is the innovation behind Bitcoin? What is it trying to replace with a current system that we have? Is it our monetary system? Is it our banking system? Is it our gold trading or gold mining system? Whatever it is, what is it trying to replace? And is Bitcoin a lot more efficient than that, right? And then you'll get your answer. That is a lot. You're comparing apples with apples in this way. In their approach, they're not comparing apples with apples. It's a very biased way of comparison Bitcoin. For example, if Bitcoin is trying to compete with the current monetary banking system, how much does that current monetary banking system burn as far as electricity? And let's compare it to Bitcoin. That's would be a better approach. Okay, so let's just keep it neutral at this point, because this is not what this deep dive is about. I just don't like the way they frame that. But let's move on. We also have a good statement here. It is worth noting that by large, proof of work blockchains are based on some sort of hashing. For sure, we know that. A mathematical function that is easy to compute forward and hard to reverse going backwards. Okay, that's fine, because obviously it's immutable, right? And all of that. But what we have to understand is this some sort of hashing is exactly where they are able to get more specific, particularly to this usefulness with the factoring. So instead of some sort, just any random math like what Bitcoin does, what they're saying is, no, we're not going to do any random math. We're going to do factoring, which is pretty good. And now, why factoring? What is the value behind factoring? Now, if we keep on scrolling down, who cares about integer factoring? Factorization is a big industry and very undervalued, in my opinion. I never expected it to be such a lucrative space. But if you kind of look at their arguments here, you can see why people are willing to pay in order to get these numbers or this math done. Now, what comes to my mind is, why does it have to be only factoring? Why can't we have a blockchain that essentially bounces around from any type of math that is necessary in the free market? So maybe the flavor of the month is factoring right now, but tomorrow it might be some sort of other math or some other utility or usefulness. Like I've talked about another blockchain in the past that is a smart contract platform that uses its usefulness from its proof of work to basically train AI models. Guys, that is a very current usefulness right now. So why not be able to kind of bounce around to different usefulness cases, if you get what I mean, okay, so to speak. So let's keep on going down. And why is factoring important? Well, because we have a lot of institutions that use this. The RSA, as mentioned before, and in fact, they give rewards, thousands of dollars for rewards for $20,000 plus, and many different rewards to basically factor prime numbers, guys. This is a lucrative business, apparently. In addition, the interest from private industry. There are more than a dozen active academic communities that factor integers as a hobby in the hopes of advancing our knowledge of mathematical theory in various areas. When I read the word hobby, when we talk about hobbies, they're usually something that doesn't generate income. So I don't like that word. If it's going to be a lucrative thing that we're going to be factoring, it's not for a hobby. It's got to be for business. It's got to have a return. We got to be able to invest some time or some sort of raw material, which is usually time or a hard drive space or electricity or or graphics card or whatever processing, and then have a return. Not a hobby for fun, but nonetheless, these are very important endeavors for national science foundations and other project and other institutions, as you can see. So if we can kind of get a front run this idea and basically provide these institutions some of these factorizations, let's call them, or factoring processing power, there is some usefulness. The energy that is used or utilized to secure the network essentially is not completely lost. So if we go back to the original statement with regards to Bitcoin and how they compare Bitcoin to, its inefficiency in electrical consumption, the better statement would be, in this case, instead of using Bitcoin's consensus that makes basically doesn't use the electricity in a positive way, it's just a useless mathematics. Why don't we convert that useless mathematics into something useful that the overall marketplace is willing to pay for, and have it all obviously as another revenue stream rather than just doing some arbitrary math that has no utility. Okay, so that's a good thing. That's actually a great argument. The future of a proof of work. The concern of large, at large, is the energy consumption. Of course, that's something that we always talk about. That's one of the biggest conversation pieces when we talk about cryptocurrencies and Bitcoin and so on. Technology is not about energy usage, but rather about the fact that the work for which the energy is used improves a part of our life, improves something, whether it be earning or just regular life, as human endeavors, a quality of life, whatever it is. That is basically what it is. Don't make it wasteful. The electricity shouldn't be wasted for just some random utility. Okay, so this is how it is. The issue is not proof of work mining. It's instead that until now the proof of work has not gone to benefit any other enterprise but other than mining itself. So currently the electricity that is being used for Bitcoin essentially is just used for Bitcoin. Whereas in this case, when you look at FACT0RN, the energy that is being used through the proof of work is used for other things as well that have utility and have value. Okay, so a little bit of repetition here. They're really trying to drive that concept, the core value behind the network, to the reader, which is obviously very, very important, because that's the point of differentiation between FACT0RN and Bitcoin. Right, that's the point of differentiation, is that the usefulness behind the hashing. All right, guys, let's move on. What else do we got here? We got a few other pages. Let's see what else we did. The about, we did the roadmap, we did let's see what this is, exchanges. We did here the market details. What's this? We did this was good. We did the white papers. You saw it was full of math. All right, let's go take a look at CoinGecko just to kind of let you know what's happening here. You can see that a lot of this data is not valid. Okay, guys, just be careful. Using CoinMarketCap as well and CoinGecko, they do a great job, no doubt. It's a lot of work to keep up with a lot of these projects. There's new projects every single day, lots of volatility and all that, but we always have to second guess, especially when both of those websites don't add up properly. Okay, so just keep that in mind. And if you go down, we have the exchanges that were spoken of on the website, right? We have these two, which are 95% of the volume comes out of MEXC or whatever this is called, but not bad of a scenario. At least we have some sort of decentralized exchange. I'm wondering if later on they'll have some sort of decentralized exchange, going for it in the future. Okay, so let's move on. What else? You guys know that I do give you guys one of those infographics each and every day. I am each and every deep dive. I'm going to be posting this on the socials. So this is my overall perception here about FACT0RN. Number one, I gotta say it, the website doesn't do it justice. It needs a full-on revamp. It needs everything, all the bells and whistles. I do this every single day for multiple projects on a daily basis, and this will not fly. If you want people to take it seriously, it will not fly. Okay, so we need to get that up to speed, and we need to have nice charts and graphs and easy ways to relay messages for the retail market. The average person wants to get their information handed to them, and that's basically the job of a well-established marketing team. Now, I know FACT0RN is a completely decentralized organization and potentially no marketing team, but somebody needs to take accountability for that website. The website right now is absolutely rock bottom. Okay, let's move on. Let's kind of look at what's going on. Ecosystem, zero, no ecosystem whatsoever happening, no information, no really anything happening. Utility, okay, it's a blockchain ledger like Bitcoin, nothing really out there, right? A useful proof of work, great narrative, a narrative that is picking up. I'm hearing a lot of buzzing about this usefulness, so something that you may want to consider. It is a fork of Bitcoin, so again, it's going to use a lot of the properties or the mentality of how Bitcoin functions. So maybe even from that fact, they feel like it's not even necessary to provide a lot of information, because as long as you know it's a fork of Bitcoin, you can assume that it's similar to Bitcoin and everybody knows Bitcoin. Wrong. You need to kind of get that information out there regardless. So 7 out of 10 there. Roadmap, although all the objectives are met and the roadmap is there, it needs dates and details. At the end of the day, that will keep the team accountable and to keep the progress accountable. And as of now, yes, they hit some good milestones. They hit some good checks, but at the end of the day, it needs a little bit more. And for its size, you got to admit, it's okay for where it is. It's a small market cap project. It's not huge, so it's not bad of a scenario. The team is not doxed, although there is a website with some random information there. But guys, like really, it comes to a point that if I have to dig through the abyss of information on the internet to find one little 2-3 sentences of an individual that's random there, for me, you gotta be, if you want to be doxed, you'll make yourself known. You'll put yourself in a very positive light to the community, and that way we can gain a little bit of confidence in who's behind this project. And at the end of the day, who's creating that website, who's doing the marketing, who's running the Twitter, the X account, who's on Discord, who's manning that Discord or getting that community going on Discord. And as of now, really, there's no confidence in me to say there's a team that is transparent. So I got to move on there. Socials, 9 out of 10, not bad given the fact that their X following has been growing, up 100 and something percent, 125%. Lots of new followers, lots of good stuff. A few X posts in the last little while, still up. So really positive on socials. I appreciate to see that happening. 47,000 followers. Okay, it is growing. And at the end of the day, I expect some good stuff here for the socials. The Discord, it needs help. The team should get somebody in there, communicate somebody. But again, where are they going to get that budget from? Where are they going to get? This is the biggest issue with projects that are a completely fair launch, is that they don't have a real budget happening. They're relying on the community to kind of run this thing. But reality is that's sometimes how you get real sour apples into the communities that don't really truly represent the culture of a project. So for me, it's quite important to get somebody on board and getting in there and basically navigating the culture of the Discord. That would be a very positive thing. Tokenomics is not bad, unlimited supply, but we got to understand that we have to come up with the understanding that eventually as the mining becomes more difficult due to the factoring difficulty, there should be a damper on the supply, on the sense that the amount of tokens that get issued, the coins that get issued. In that case, it could even flatline, basically come to a halt, or maybe even become deflationary at some point if there's some sort of mechanism that might be introduced later, which I don't even see. So again, a lot of ambiguity with regards to its max supply and unlimited supply, and a lot of ambiguity on how they are going to keep control of the dilution of the price. But that for me is something that we have to understand, that with new projects there's a lot of ambiguity. So tokenomics are not bad, tied to factoring in difficulty, so that's their mechanism to keep it low. But is it actually going to work? And this is where I would love to see a little bit more confidence in the team to spell that out with some clarity. Partnerships, nothing really there. And to be honest, going back to tokenomics, I think it was a little bit too easy. I should have brought it down a little bit, but it's okay. We have to understand it's quite new and they got some ironing to do. Partnerships, nothing really happening there. Don't see, other than Coinbase. Yes, is it a partner? Not really. Not really. At this point, it looks like they just got some sort of funding, and that was about it. Or they're backed by Coinbase, which is great. Some sort of at least a connection there, but real partnership, they're not even listed on Coinbase. So let's put it at that, right? So I'm a little bit on the fence there about that scenario. As soon as we get some good indication that, you know, there's some partnerships, we're going to have to do an updated deep dive here. Exchanges, low liquidity exchanges, not the greatest thing, especially if you're a trader. However, it could be a positive thing, because again, if it starts to get listed on Coinbase, this thing's going to rocket. It's going to really fly, and that way you'll see a lot more volume, a lot more confidence in the market, and so this could be also considered an opportunity. Exchange listings are opportunities to see volume and price action. Okay, so let's move on here. We talked about this a little bit. Just keep in mind, I know the price and the overall metrics here are a little bit outdated, because I did do this deep dive in research about 24 hours ago, and there's been a little bit of a dip in the last little while, but this is what it is. Okay, guys, more or less about $70 price at the current moment. A market cap, it's small market cap, 27 million, so we got a lot of room to grow. And if you kind of think about it, who it's competing with, its competition is the largest cap cryptocurrency out there, of course, Bitcoin. And if we're gonna, you know, compare it to Bitcoin, it's got a lot of market cap to reach up to its competition. Trading volume very low as expected. Supply, you know, it's there, 370,000 units of supply currently, and there's unlimited supply completely. There's no max supply, and fully diluted valuation currently is 277,000, which you know, I tried my best to get this going, but again, a lot of these numbers, because there's not much out there, and I'm confused as to the thousand. I think it's millions, but it's okay, no big deal. The overall importance here is the market cap. It's a very low market cap new project, and my overall verdict at the end of the day is, you know, it's a bit mixed. It's a bit mixed, to be honest, but there are some good things out here that I like. The reality is improving Bitcoin consensus mechanism and introducing useful proof of work. That is a great idea. The idea here is it's a good summary as to what this thing is trying to do, right? It's basically competing with Bitcoin. Now, can it compete with Bitcoin? Can it take Bitcoin's market cap? Is this something that we actually need in the market? Now, of course, the problem. And is this the solution to the problem? Bitcoin's only criticism at the current moment is its energy consumption. But as Bitcoin's trading volume diminishes, is the electricity that it consumes going to be there, right? Because as the supply of Bitcoin kind of diminishes, who's going to be trading Bitcoin? It's a store of value. It's not going to be traded eventually. You get what I mean? So ultimately, the electricity should drop. So is there really a problem? I think there is a problem in the short term. Of course, we see all that mining, especially now with the halving. We're going to see the miners ramp up their mining rigs in order to keep up, so they can maintain profitability at the current rate, because you know, they're going to be, in order to maintain the amount of profitability, they got to double their efforts. They got to double their hash, which means double their electricity, double their you know, their mining capabilities. So that's an issue. But all that electricity and all that work that is getting done is being basically useless. Right? So they're trying to involve some usefulness to their mining rather than just some random math. So this is where it comes to, you know, considering them challenging Bitcoin is quite a challenge. Let's put it that way. We're talking about the biggest cryptocurrency out there. Useful proof of work is a trend. I'm seeing it pick up across many, you know, blockchains, and this could be something that we may need to keep an eye on. Inflation is controlled by factoring a difficulty. So again, understanding that max supply is unlimited, yes, but eventually should taper off to pretty much to a halt as the factoring becomes super difficult. We shouldn't get much much more token coins entering in circulation. Socials are healthy, however engagement on Discord needs improvement, guys. That Discord right now, honestly, I went in there to ask a couple questions. The culture, the feeling, everything about it is not really the most pleasant. A team member, somebody needs to be on there to make sure that the culture of the Discord is positive and it's just engaging and it's welcoming, right? No information on the team. There is a little bit, but I'm gonna say none because it's not really clear, and I would have loved to see a little bit more information on who's in the back end of this and running this project, and ensuring that it does succeed. Website needs an overhaul, complete overhaul. It should include a deep dive information, every single piece of data that an individual needs to get bullish in order to get this project on their portfolio for the up and coming bull run should be there on the website 100%. So again, I do these deep dives quite a bit. I'm always looking for new projects, and that website does not give it to you. You have to dig, you got to start moving around to different blogs and so on, and that's a negative for me. The white paper is detailed, bonus, great, good stuff if you're a mathematician, if you're a heavy duty computer science major, great. If you're deep into the narrative, awesome. However, guys, for the average investor, for mass adoption, the average person, you need to spell it out in a very clean way. So graphics, pie charts, all that stuff needs to be available. Whatever approach they take, right on the website or a Git book or something like that, that is the strategy. And again, let's get back to this. The unlimited max supply concept needs to be clearly explained without details. Is it a red flag for many people? Guys, this is the issue. And for me, it was a bit of a red flag. It's still somewhat of a red flag, but as I'm reading, they're hoping that again the overall mechanism kicks in. We got to give it a bit of a chance. We got to understand every project right now in the crypto space has a level of speculation and risk associated to it, and if you don't take a bit of a chance on new technology, there's no way that you're going to make those big gains. So understanding the risk to reward is definitely there on all projects, and the reward is decent, but there is a bit of risk. So make sure that you balance yourself out here with the correct position size. Now, if we compare FACT with other blockchains, guys, do I dare even compare it with a Litecoin or even a Bitcoin Cash or Bitcoin itself, right? We're talking about massive gains if this is going to compete. We're talking about a minimum, like with Litecoin, we're looking at 237x, like crazy. I was very reluctant to put this on here because I didn't want to give false hopes to people. But at the end of the day, this is an important thing, because if you're looking at what it's trying to do, yes, it's trying to compete with the heavyweights of the proof of work system, and it's directly competing with Bitcoin. Now, the reality is, so is Litecoin, so is others that are, proof of work and simple like this, not a smart contract platform whatsoever. It has the same value proposition and utility as Bitcoin. It just changed a little bit of how it works in the back end, which is obviously great. But is it going to actually take some of the market cap and catch up to Litecoin or some of those major, billion-dollar market cap projects? Guys, I'm gonna have to be very modest here and say, it could happen, and it could take some time here. But I would say a healthy price target for the up and coming bull run would be around $2,000. If it does happen, great stuff here, guys. We're talking about a micro cap that could get up there and quickly get around that zone. Maybe around 1 to 2K is definitely fine. Obviously, guys, you know how I am here on the channel. I do trade. I'm an active trader, and for me to put price targets that are ridiculously high or even ridiculously low without statistical data is very difficult, right? It's not the right way to do it. In my opinion, the best way to do this, let's see how the momentum picks up on this thing. Let it run. As soon as we see the market look a bit weak, we'll come up with a strategy to start DCAing out, because that is the top. That's the target. The target can't be, you can't front run the target. You can't speculate the target. There's no crystal ball out here. However, guys, it is very possible that if it's going to compete this bull run, it has to be a great bull run for FACT so that it can run up and show the general market that it is here to compete. So let's keep an eye on it. It may happen in the next bull run where it reaches its bullish price targets and starts getting to those billion-dollar levels. But in the current bull run, if we can get somewhere around $500 million market cap, even close enough to the $1 billion market cap, guys, that would be really, really good. And again, right around 2K might be a great start to consider taking a bit of profits, given the fact that it's only right now at about $60-$70. Guys, think about that. I give it a 7 out of 10. Obviously, there's some things that needs a bit of improvement. There's some things that are a little bit ambiguous, but this is the name of the game when you're talking about new projects. There's not a lot of clarity, and you're going to have to take it with a grain of salt and understand that the risk to reward ratio has to be considered. All right, guys, I know you're here to talk about charts, so let's do that. Let's take a look at the fact chart real quick and see what has been happening in the last little while. We see a bit of a pullback. Yes, we did come up really, really nice with a nice, run to higher levels. However, guys, in the last little bit, we've been pulling back. Now, the question is this the time to take risk? Of course, risk to reward ratio, as I mentioned, is the name of the game here for new projects without, previous price action, tons of speculation. So what do? Let's take a look at this in a little bit more detail. So you can see, again, we're looking at the daily. The daily for me is the perfect time frame to actually see where this thing is going. And to be honest, lately I've been looking at the weekly just to give me an idea as to where this bull run is leading. So far, generally speaking, the weekly on many projects they're basically going to overbought conditions. They're leading into overbought conditions, which means that we could continue to the upside. We should continue to the upside in the long term based on the weekly. The daily brings it a lot closer and saying, okay, yes, we're dipping down in the last little while, and then we can get into the 4-hour and see what kind of entries we can get. Right now, the daily is not looking the greatest. However, we don't have much data. Again, the data is missing. No MACD data really, and the RSI is limited here on the daily. So we can just look at price action, which at the current level, we are currently fighting for some support. We need some support here. And the only thing that I can say is that the volume is giving me an indication, the volume profile right into here. We have horizontal support based on the $65 mark, which is the top of the volume gap. If we break through the volume gap, we could come straight down to the bottom of the volume gap, which is at about $40. And this is where we get a bit of price action to hold up as support. So if we do fall, this is the buy the dip opportunity. However, currently we could be holding a bit of support here at $65 to maintain structure. Now, I know a lot of us are looking at this and trying to follow patterns, and that's a viable option. Start looking for patterns. I'm going to quickly put a horizontal right in here because this is an area of interest for myself as well. I find this to be a very, very important zone because it is an accumulation zone. We did come up, make a higher high. It is bearish divergence on the daily, and the 4 hours probably going to give us a little bit more detail. But you can see that this accumulation zone, a lot of market participation, and there is a point of control in the zone at about $75, give or take. So let's get into the 4 hour because I think the 4 hour is going to do a bit of justice for us here. What's concerning to me is that this could be some sort of head and shoulders formation, right? Head and shoulders formations, especially ones after a bearish divergence, they technically do play out bearish. It is a bearish pattern if it does break the neckline. Let's define some of these characteristics. We got multiple shoulders, we got the head, and we got almost no shoulders at all here. So it could be a complex head and shoulders formation where we expect a few bounces, a few dead cat bounces, a few confirmation highs that are lower than this head, which is a confirmation high, a lower high. And that's basically what we want here. Now, if that does happen where we get a few more shoulders in the zone, you can imagine how much more accumulation or how much more volume we're going to get into this zone based on market participation. So this is critical levels here for FACT0RN because, again, this is the horizontal support, $65. Is that a place where we should be taking risk? Guys, it's not a bad zone. Let me put an arrow here. Let's make this very clear. This area right here, this horizontal support zone is not a bad area. Why? Because if it does get support, as it is trying to get support, it came below it, bounced above, came below it, bounced above, back tested it, bounced up, bounced. Now we're coming down to confirm it as support. We didn't break below just yet. We got close and wicked right back up. We're trying again. Do we continue making higher lows? If we continue making higher lows, guys, it does look like that this is potentially like trying to slowly lift up, and this is just a retracement confirming the low of this being the lows and then getting a nice bounce to the upside. So we really have to understand that trying to time the bottoms are absolutely difficult. However, this could be a bottom zone. DCAing right now is not a bad idea, getting a bit of a bag. But what are you going to do about this dip? What are you going to do about the fact that we could fly lower? Look at the RSI. The RSI is not oversold yet. What about if we consolidate like we've done here? We consolidate and then we come down to oversold conditions. And getting into oversold conditions, guaranteed, it's very likely to blast right through this volume gap and get to $40. And that's where you're going to get your next buy opportunity. So let's put a green arrow down here. Let me just duplicate this and then put one down here. Now we have to understand that this gap is pretty big. Now let's measure that so we can understand the amount of risk that we're taking. If it comes right through, we're looking at a 40% dip, give or take. Okay, 40% is significant here, guys. So you have to come up with a strategy. How are you going to defend your initial investment? How are you going to defend your capital if you get into this area right here, right now? How are you going to defend your capital? Well, a stop loss. That's the only thing you can do. Now, there is a few wicks or a few price actions that come down here and kind of give you some data. However, the fact that they're diagonal and very, all over the place and not nice and clean horizontally bothers me. However, the volume profile is really nice. A lot of clarity, quick indent, huge gap, and then out basically another indent right here. So we can see that this whole concave space is giving you a bit of clarity that if we break below, again, $63, about there, $65, it's likely that we're going to be starting to look for horizontal support. Now, could this be support? Could that be support? This is why I don't like diagonals, these little wicks down here, because it could be. Yes, it could be support. Yes, it could be support. But then once we fall below $60, guys, it really does get really super weak. Straight up price action suggests that there's no support levels along the way down, which means that we can snap to $40. So you can see that this area in general is a weak spot, right? It's a weak spot for the price. So psychologically, you got to be prepared. Let's look for the MACD here. The MACD is looking okay, very indecisive. However, it's slowly grinding to the upside with green histogram bars. I don't like it. I wouldn't be using this as an edge right now at this current moment. I'm not liking what it's showing me. So ultimately, I choose not to include it into my my bullish thesis or into my TA. Okay, I'm going to exclude it from the TA right now because it's very, very indecisive, very choppy. The volume is coming down, nice in contraction. Maybe we're going to potentially get an expansion phase very, very soon here on the 4 hour. And what else would I say is if you are going to get into a fresh long at this level, and you can see that we might get a bit of a bounce soon. What you could do is put a stop loss underneath here, mitigate your risk by controlling the amount you lose. Again, this would be a small percentage, and then all of a sudden you stop yourself out, because if it falls below, it's likely to fall, keep on falling to about $40, and then what you're going to have to do is reaccumulate down here. And obviously at this level, you'll be able to accumulate many more tokens or many more coins, and in that way, when we do bounce, even if it's back through the volume gap to $65 guaranteed, you will make back your loss that you incurred right here and profit on top. And then you trail up a stop loss and hope that it breaks and keeps on going up for the bull run, and off we go to higher levels. So these are all factors to consider. Now, what about a different strategy? A strategy where you get in with a small position here. Small enough that you're willing to endure a 40% dip. For example, get in with $100. If it dips down here 40%, you lose $40. Not the end of the day. Not the end of the world. Okay, so not a big deal. That way, down here, all you do is double down, triple down, which will bring your average cost lower. And your average cost would be, let's say hypothetical, right around here, $50, give or take. If you triple down and go down a bit heavier at this level, then upon the bounce, you get into profits a lot sooner. But at least if we do get a bounce right here, you have a small position size to celebrate the fact that you got an entry. And that is a decent place, a decent strategy to use in this phase of the market, given the fact that the trend is quite bullish and we're not seeing any signs of weakness throughout the market. Bitcoin is still looking strong, still trying to break higher highs. Not an issue there. Ethereum as well. So as of now, yes, it's smart to have a defensive plan across the board, across the market. However, it shouldn't be actionable just yet, given the fact that there's no sign of weakness anywhere in the charts currently. There's a bit of divergence here and there on Bitcoin and so on, but nothing actionable at the current moment, guys. So be careful out there, because getting into a long could be risky. Of course, stop losses are there to control your risk, but getting into shorts right now without confirmations, without any structural integrity, gives you a lot more risk ultimately. Guys, if I've offered you any value in this deep dive, obviously you know what you got to do. You got to slap the like button. It does really help out with the algorithm, getting this channel going. And if you want to join me live tonight at 7:30 Eastern, I'm going to be there talking about crypto news and price action. And of course, if you want to join that Discord, guys, the Discord is where it's at. Lots of good alpha trade setups, fundamentals, and learning material. Take care, guys. Have a good one. And don't forget, buy the dip.